We pride ourselves on the fact of finding businesses that other people haven't heard of and being one of the first institutions into that market from an investment perspective. How we find them, there are many different paths. One market that we look at closely is the IPO market. We think there are many opportunities there for mispricing and just a general lack of knowledge in the underlying business. So we work hard on getting to know those businesses before others and tend to invest quite lightly initially, but then grow with them as they prove themselves.
I think it's just a matter of doing a lot of legwork. Graeme and I see probably 150 businesses a year. So it's really getting out there, doing the legwork. You know, the best investments don't just pop up on the front page of the Business Age. You've got to go out there and look for them. And it's a matter of actually saying no to a lot of businesses. We'd probably say no to 19 out of the 20 businesses we'd see.
I certainly wouldn't call us value investors in the traditional sense. I guess it depends how you define value. For us, value is realised over time. So we don't particularly look for a cheap entry point. We look for a company that will deliver growth, both from an earnings perspective and a share price perspective over time. The entry point should become irrelevant if you get something right.
And importantly for any investment that goes into the fund, it's a unanimous decision. So unless Graeme and I can agree completely on an investment, it doesn't go into the fund, and unless we agree with it ongoing, it doesn't stay in the fund. And we think that's why we've managed to miss out on a lot of bad investments, because we've got that unanimous agreement that means the bar for an investment going into the fund is actually very, very high.
I think one thing that Dean and I have learned over our 20 plus years each in the market is that you can never assume you know more than the market itself. So if we get something wrong, or if a share price is moving heavily against us, we tend not to double down or be more aggressive. We look for where the risks lie and respect them, and probably act accordingly, more defensively than anything. You can't really protect completely against the downside, but you can mitigate some of the risks. And one of the points of difference in our business is probably the fact that the fund can hold a very flexible cash balance. In fact, since inception, we've held a cash balance representing about 35% of the total capital managed by the fund. The performance to date has been very strong. We'd love to think that it's maintainable, but there are no guarantees. What I can say is that since the inception of the fund, our investment philosophy or process hasn't changed at all. We have been rewarded for good positions, and we will continue to invest in companies we understand and believe will grow. But you never know what the market has in store for you. But all you can do is continue with the same sort of risk parameters and investment profile that we have.